Moving averages indicates the average price movement over a certain period. Let's go. Before we unlock the secrets, let's cover the basics first. King trading utilizes both simple moving average and the exponential moving average. The SMA indicates the average of 20 closing prices for the last 20 candles, with equal weight given to all bars, and this average will never change in the past, but only as a new bar is added. The EMA gives more weight to the latest price bars, so it'll be more sensitive to recent price changes than SMA. Therefore, SMA can be used to cancel out noise and help find out longer-term trends and price levels, and makes sense to use especially with the 20 period, as this is typically used for Bollinger Bands. This is why SMA is better used for higher time frames like 20 period, and EMA is used for lower periods like the 5 and the 13, as they move faster and give more priority to the latest price bars. Make sure to subscribe to King Trading, as I use moving averages in my analysis all the time. So let's start to dig into those secrets. So now that we know what they are, let's discuss how we can use them. Being that all charts act and react the same, it's important to note that these indicators can be used pretty much on any time frame. King Trading focuses on the 5-minute, 1 hour, daily, weekly, and monthly. The 20 SMA is a very useful moving average, as it can be used in conjunction with other moving averages and other indicators. First, the 20 SMA is typically used for Bollinger Bands. Bollinger Bands take 2 standard deviations of the last 20 closing period prices, both above and below the 20 SMA. This means that prices stay within the bounds 95% of the time. That is why if you ever see price jump outside the bands, it quickly reverses back within them. Also, if price drifts too far away, it will either at some point reverse or move left to right, a correction through time, to allow the 20 simple moving average to catch up with price. Also, the 20 SMA will act as ultimate support in a bull trend and resistance in a bear trend. Now, if we want to see a trend change occurring, the 20 SMA can be used with a little help from the 5 EMA we discussed earlier. By itself, the 5 EMA being held while going up means we're full bull. But if it's butting up above it on the way down, then it's full bear. But if we tie the 5 EMA back to the 20 SMA prior to a trend changing, it needs to start somewhere. So when we see the 5 EMA cross above the 20 SMA, this is typically the start of a bull cycle. Or if it crosses below the 20 SMA, the start of a bear cycle. Essentially, think of it this way. When the gap between the 5 EMA and the 20 SMA is widening, it indicates that the trend is strong. Whereas when the gap between the 5 EMA and 20 SMA is narrowing, it indicates that the trend is weakening. But before the 5 EMA tests the 20 SMA, it typically tests the 13 EMA first. And this is yet another area that typically acts as strong support or resistance. Once again, in an uptrend, if revisiting it, it acts as support, and if in a downtrend and revisiting it, it acts as resistance. By spotting reversal structure, where for example an opposite color candle is either the same size as the prior or completely engulfs the other, or a long wick is encountered, this is a clear signal that a reversal is underway. King Trading typically combines these moving average reversals with other patterns such as trendline channels, head and shoulders, or cup and handles, as well as also combining it with other technical indicators such as MACD, RSI, stochastic, as when a confluence of indicators are all pointing in the same direction, it helps provides a more robust trading strategy. The 5 EMA crossover on the 13 EMA is a decent trade indicator when used with a variety of other technical indicators. King Trading uses this crossover on the 1 hour along with a variety of other indicators to help understand when to enter and exit trades, as well as utilizing backtesting, where King Trading uses 10 years of 1 hour data to understand the optimal take profit and stop loss percentages. Most King Trading swing trades have a minimum risk to reward setup of 2 to 1. One thing for sure is that if the 5-minute, hourly, or daily is holding the 5 EMA, then I'm holding my trade, which can take that 2 to 1 to a 3 to 1 or even higher. The 200 simple moving average is another important moving average. Some traders will simply look at the closing price to understand whether or not it's above or below the 200 simple moving average to give a head nod of whether we're bullish or bearish. But it can also be coupled with the 50-day moving average. When the 50 SMA crosses above the 200 SMA, it is considered long-term bullish or positive market sentiment. And this is called the golden cross. Whereas when it crosses below, it is considered long-term bearish, and it's called the death cross. The reason moving averages are so critical to understand is since this incorporates the trading psychology of other traders and investors, and trading algorithms utilized by the big shots on Wall Street. So by including them, it helps traders stay on the right side of the trade. So it's important also to understand the economic calendar. In the end, remember, however, that TA doesn't drive fundamentals. It's the other way around, and how market reports can take setups that appear neutral in one direction or another. And from a technical analysis standpoint, it'll make perfect sense. The King Trading Discord provides this fundamental analysis. Hopefully all this discussion around moving averages and their secrets has helped, as that's all I have for now until the next video, and we'll see you then.